Welcome Accounting Boffins, you with Ashraf Patel and the crew guys. And remember, we're looking at questions on fixed assets. Let's do a quick recap on what is it that you need to know regarding your fixed assets. Remember we said the most important thing to remember is that you have calculations to complete with regards to depreciation, and then with regards to depreciation you have the cost price method and you also have the book value or the carrying value method of depreciation. So clearly you can see your two different methods of depreciation are very, very important when it comes to your fixed assets. Right, and then remember we also said that your asset disposal account is an interim nominal account that you open up to serve a particular purpose once you've achieved that particular objective. In other words, you've calculated whether you've made a profit or a loss on sale of asset, then obviously you will notice that that account self-destructs, it actually closes off, and you either transfer a profit to the profit and sale of asset account or a loss to the loss on sale of asset account. Okay, now let's look at this information that we have here. It says here, Amalinda Limited. The following information appears in the accounting records of Amalinda Limited for the financial year ended 29th of February 2020. Okay, what is it that we have? We are asked to complete the note, which is your tangible assets note, and you will notice that they are giving you additional information. In other words, they're telling you, take the following information into account in order to complete that particular note. So, what do we know? On the 1st of April 2019, the business acquired a mortgage bond of 2,500,000 to purchase the new buildings. So immediately you go into your note and you realize that this is the situation here. What had happened was you had actually purchased land and buildings to the tune of 2,500,000. Clearly you can see it's an addition. In other words, you had absolutely no land and buildings at the beginning of the year. During the year, you purchased additional land and buildings to the value of 2,500,000, and as a result, that is now your closing balance at the end of the year. Also, we remember that land and buildings does not have any accumulated depreciation to it. Land and buildings do not depreciate in value, rather they appreciate in value. Okay, so that's your land and buildings now that we've sorted out. Let's go on to the next one, which is our vehicles. They're telling you that in terms of the additional information, okay, that one we've done. December, additional equipment was bought. We'll come back to that one there. Let's just keep it aside. And that's the method of depreciation for your equipment. Okay, now let's look at the equipment. Let's in fact do the equipment. We're saying here on the 31st of December 2019, additional equipment was bought. Clearly you can see, if you look at your equipment at the beginning of the year, had an opening balance of 375,500, and at the end of the year has an opening balance of 400,300. So immediately what you're going to do now is we're going to do this here. Let's take this into account and we say 400,300, which is my closing balance, minus my opening balance of 375,500, and you will notice you get a figure of 24,800. Immediately you know now, you can go in and slot in that figure of 24,800. Here we go. That's the land and buildings. Oh, sorry, that's the equipment that we have purchased. The land and buildings, we've indicated that figure there already. Okay, now, another question of importance. Why did I do a straightforward comparison in my equipment from my opening to my closing balance? Because clearly you could see, and you can still see, that there were no disposals. Can you see that? Let's just do this here so we can clearly see it. there are no disposals. So therefore, you could compare your opening balance with your closing balance and then determine that you had purchased additional equipment to the value of 24,800. Remember, you can only do that if there is no disposal. Right, next step. What are we expected to now do? We are expected to calculate the depreciation on the equipment. What do we know about this? We told here that depreciation on equipment is calculated at 20% per annum on the carrying value. Okay, so immediately I say fine. Let me go in and do my depreciation calculation. So obviously what I'm going to do here is I'm going to work on the old first, right? And taking my information, it's 375,500. Here we go, 375,500 minus the accumulated depreciation. And what was my accumulated depreciation? 141,500 minus 141,500. Okay, let's do that calculation there. So here we go. We say 375,500 minus 141,500 will give me a figure of 234,000. Right. So 234,000 is now my carrying value. What do I need to do? I needed to calculate my depreciation on my equipment on 20% per annum on the carrying value. So I've got my carrying value, which was 234,000. Here we go, 234,000 times 20%. Remember, 20 over 100 times your time. You had this equipment for the entire year. Clearly, you can see we're using art once again, amount, rate, and time. And here we go. Let's do this. It's 234,000. We've got our figure there, times 20%. And this will be equal to 46,800. So 46,800 is the depreciation on my old equipment, right? Did I buy new equipment? Yes, I did. Let me have a look at that. The new equipment that was purchased, we said it was on the 1st of April, the business acquired, we got that. On the 31st of December 2019, additional equipment was bought. Right, so if I'm working December, clearly you can see that my year started in March, obviously, the beginning of the financial year. If I bought on the 1st of December, it's December, January, February, 3 months of this financial year. So only 3 months did we use the new equipment. Okay, we've already ascertained that we purchased equipment for 24,800. Therefore, let's look at this one here. We got our 24,800 was the value of the new equipment times the 20 over 100 times 3 over 12. Okay, now remember once again, the question is, why am I using the 24,800? Because the 24,800 was not subjected to any depreciation, it's new equipment. Therefore, you work on the 24,800. Okay, let's take the 24,800 now. 24,800 was the new equipment that we purchased, times 20%, which is my rate of depreciation, times 3, divide by 12, and that will give me a figure of 1,240. Okay, here we go. 1,240 will be my, let's just put it clearer, 1,240. Okay, this is now my depreciation on my new equipment. So therefore, what do? I take the 1,240 plus the 46,800, and that will give me 48,040 as my depreciation figure. Let's see where we have it. There we go, 48,040. Okay, so what have we done? I've shown you the actual calculation that we needed to do in terms of the equipment that we had, the old equipment, plus the new equipment that we had purchased, and therefore you can see that the total depreciation on equipment amounted to 48,040, and then we've actually done a calculation to prove it. So there we go. We now have our opening balance, which was the carrying value at the beginning of the year. Add your addition, right, minus your depreciation will give you your carrying value at the end of the year. Okay, we're now looking at vehicles. With regards to vehicles, we are told that, let's get the information with regards to the vehicles. There we go. On the 1st of November 2019, one of the vehicles was sold on credit at a loss of 4,200. On the equipment is sorted. Vehicles are depreciated at 15% per annum on cost, and equipment is sorted. Okay, now look at the information that we have here. All that you are told is that the accumulated depreciation on your vehicles at the beginning of the year amounts to 450,000 Rand. Right. Remember, it was 4 vehicles, all of them identical. So step number 1, what do? We take the 450,000, which is my accumulated depreciation, divide that by 4 will give me 112,500 per vehicle, right? Okay, now that I have that, what would I do? I say, fine, take this into consideration now. If I take this here as 112,500, which was equal to 15%, 100% is equal to my unknown. Let's solve that equation there. Here we go. So what do we say? 112,500 times 100 divided by 15 will give me a value of 750,000. Voila, what do I have? I've got my cost price of my vehicles to be 750,000. So clearly you can see here, what did I have to do? I had to use my accumulated depreciation to determine my cost price. Okay, once I've done that, I now have a carrying value, obviously 750,000 minus the 450 will give me a carrying value of 300,000, right? And now I'm told with regards to the disposal, what am I told? I'm told here that the vehicle was sold. Let's get the information, right? Where we are. Here's it. It was sold on credit at a loss of 4,200. So clearly, you can see here that if you take this into consideration now, you will work out that if your vehicle cost you, what did we say? 750,000 divided by 4 will give you a cost of 187,500, right? And then we also say we take into consideration that the depreciation that we calculated was, if it was 450,000 for 4, let's work that one out. 450,000 for 4 divided by 4 will give you 112,500. Okay, so now we've got those two figures. We've got the, let's just write this figure down here. So we keep it aside, we're going to use it. It will be the 112,500, right? And then we take the cost price, which we said was 750,000 divided by 4, gave me a figure of 187,500 minus your 112,500. Clearly you can see it was 75,000, right? That was your carrying value. And then obviously your current year's depreciation had to be calculated. Okay, so now this means therefore, if you look at your vehicles figure, let's fit in all the figures that we have. Okay, there we go. Now, if you looked at your 56,250, that would be your disposal at your carrying value. Okay? Now, once again, what is important is when you are doing this calculation, make sure that you have your cost price minus your accumulated depreciation, which is equal to your carrying value, right? And then we say what? When was this vehicle sold? This vehicle that we sold, let's get the information. On the 1st of November, one of the vehicles was sold on credit at a loss of 4,200. So remember, your table that you draw up for asset disposal, when you are drawing up this table, you're starting with you are given the loss. So therefore, when you are doing this here, keep this in mind. Keep this in mind. You got your depreciation, you got your cost price, your accumulated depreciation, your carrying value, your selling price, and your profit or your loss. So we've already got some of these figures. Remember, we worked them out. However, what is important to remember is that in this case here, they are not giving you your selling price. They are giving you the loss figure. So using the loss figure, which was 4,200, let's just verify that figure. Here we go. There's it. 4,200 was my loss. So in my table now, what is very important is that you have a loss of 4,200. So you work backwards to determine your carrying value, because we know that in note number 3, we always say disposals at carrying value. Please note, in note number 3, there we go. It's disposals at carrying value. That's how we get to the figure of 56,250. Remember what you have to do? You have to complete the table, right? You've already slotted in the cost price. You've slotted in the accumulated depreciation. You put in the current year's depreciation. Once you have all of that, you now determine the carrying value, and that's the figure that you're going to use in your note number 3 for disposals at carrying value. This then gives you the completed note number 3. As you can see, this figure was pre-populated for you. Obviously, you've done the land and buildings, you've done the equipment, and you've worked out the vehicles. The most important thing to remember in this particular question, the challenge was to determine that cost price of that vehicle. Because remember, you were given the accumulated depreciation. And as you can remember, we worked backwards to determine the cost price. So please, guys, important, when you're working with asset disposal, understand that sometimes, depending on the information that's given to you, you are then expected to work out the missing figures. Okay? Let's take a quick break, and we'll see you just now.